surged in yesterday's session, having gained 5%. This is how the market reacted to the official industry data report that showed a decline in the US oil inventories by 5.9 million barrels for the previous week. The actual decline was twice as much as analysts predicted. This means that oil may now enter a high price range. Meanwhile, the reaction of the Russian ruble was quite unexpected despite favorable conditions for that. Find out the reasons for such a scenario in our review. As a result of yesterday's rally, oil has moved to a higher price channel. In the morning session, Brent edged lower by 0.1% and settled at $66.60 per barrel. Brent is expected to hold in the range between $65 and $68 a barrel. Oil is rising on a strong US stock market, while the factor of the third COVID-19 wave in the EU and the whole world is being downplayed by traders. WTI, having declined by almost the same amount, was trading at $63.30 per barrel. North American crude is likely to hold in the range between $61 and $65 a barrel. Oil demand is set to increase in the US during the summer season, especially given the robust vaccination campaign in the country. So this summer, the number of vacation trips is likely to be higher than a year ago. Notably, around 35% of the US citizens have already been vaccinated. Meanwhile, the ruble's behavior is still surprising the markets. Just 2 days ago, it showed a rapid rise after a phone call between Joe Biden and Vladimir Putin, initiated by the US president. However, the ruble lost all its gains in today's session. The dollar-ruble pair has rapidly advanced to 77.17. The reason for this could be the comments by Bloomberg that the US may impose new sanctions against Russia for recent cyber attacks. Therefore, the weakening ruble will stay in the range between 75.50 and 78 against the US dollar. On Thursday morning, the euro, along with the greenback, significantly advanced against the ruble. Of course, this was due to the ruble's fall. Experts are not quite sure about the actual reason for such a collapse, so it is recommended to wait for the results at the close of the trading session. Amid such volatility, the ruble can both decline or advance again. In the morning, the euro rose by 1.5% to trade at 92.30 against the ruble. The pair will most likely stay between 91 and 93 rubles per euro. Today, the Russian market is fully focused on the ruble. Inflation in Russia declined to 0.1% for the week, which is a positive factor for the local economy. At the same time, many analysts expect the Russian central bank to raise interest rates on April 22nd. The oil rally from yesterday should have supported the Russian market, but a slump in the ruble's quotes confused market participants. So we will continue to monitor the situation and assess all the possible factors that can influence the Russian and global markets. That's all for now. Thank you for watching and stay tuned.